Sorry for the delay in this webinar due to some technical problems here. Now it's okay. We can get started now. Good evening, everybody. Welcome to this webinar. I'm very sure this webinar will open up your eyes and mind. My name is John, and I'm a retired civil engineer. I have been investing in the financial market since 25 years ago. I trade and invest for a living until today. I invested more than $35,000 to educate myself about trading and investing. So one thing I had to tell you, without learning, without education, you won't go anywhere on any investment. I made hits and lost hits during my first few years of trading and investing, but with passion, hard work, and perseverance, I finally succeeded. So here is my credentials. I got the Diploma of Financial Services in the year 2004. To get this certificate is not that easy. You had to pass it with 80 marks at least. Below 80 marks, you had to receive for the test. So I'm very confident to tell you tonight, I can share you something that you can make some good money from the investment. Don't put the cash under the mattress or under the bed. You all know that cash year in and year out, losing in value due to the rising cost, and that is inflation. So you must find somewhere to invest. So you invest in property or in share. Which one is better? Tell me. Sunset property is better and Sunset share is better. A lot of arguments can go on. And I think it's a stupid argument. It doesn't matter where you invest, they are the same. But there is always a better time to invest. When I'm talking about investment, how to get a big return and a faster return in either investment, either from property or from share. So we always have to look for the right time, a better timings to invest. Now you can see this slide, the investment returns for 20 years. If you compare real estate and the share, they are about the same, isn't it? So it doesn't really matter. But how do we get the bigger and faster return? If you look at this slide, you can see that traditional approach, the return for the stock market is you invest in the year 1997 with $150,000, and in the year 2017 you get about 800,000 return, and you invest in the property, you get about 700,000. But if you use the unconventional approach, you might get 4 million. All right. So how to get the big gain and the big return? It's all about the cycle timing. It does not happen all the time. It always happens in a big bullish super cycle. But we need to know when is the next super cycle. It's not that easy, isn't it, if you have no knowledge and if you don't have the experience. Now you can look at this return from the real estate from the year 2013 and 2017. The yearly return is about 20% to 25%. So that is a good time to invest, isn't it? In that 4 years. I still remember when I migrated here in 1993, property was very depressing. And one house I bought in Sydney in the year 1994 for 450,000 could only be sold for about 580,000 in the year 2001. And that means a pathetic gain of only 28% in 7 years. Can you see the great difference? In the year I invest and the year that you invest in 2013 to 2017, the return is so much different, isn't it? So this is all about cycle timing, when to buy and when to sell. So there is always a period of cycle time that you can get big and fast return. What about the current property market situations? Anyone can tell me? Is it good or bad to invest now? I think you all should know, isn't it? It's not the right time now, right? It's coming down from the top. Now look at this. Now I can show you some examples how you make money, how much money you can make from the stock market. Look at this stock, NXT. This stock rose from $1 to $6 over a period of less than 2 years. That is a 6-time return. I still remember that when I bought this stock, it was about 67 cents. So you got to know when to buy. Right, from $1 to $6 here, and then it pull back, and that's called the corrections. And then it start to go again to $7.50. And look at this stock. It rose out from 3 cents to $13 and returns of 443 times. I bought around 3 cents during that time, but I keep myself. I sold too early at $1.10. Why I sold so early? Even though it is already a very good return. Honestly, during that time, probably I don't have the best experience. So you got to know when to buy and when to sell. And this A2 milk. I think you all know this A2 milk, right? That you can buy in the what I call the supermarket. It went out from 70 cents to $13. A period. So but I think there's a mistake here. It's not 80 cents. This one is $8. Sorry, it's $8. It's the typing error here. Okay, and this stock GSY from 40 cents to $4.50 over a short period only. How many years? I think we can see from the chart. It's about a period of 1 year. All right. This is the $4.50 only I think that was, it went out to $4.50 around December, around February this year. How about silver? You can see that it went up from $8 to $50 over a period of 2 years. And same thing happened to gold. Went up from $300 to $1,920. Remember, all this game does not happen all the time. There is a time, but when is it? So you got to know, you got to learn, you got to educate yourself. So this stock, you all know, right? Apple. It went out from 100 billion capitalizations to 1 trillion only about 10 days ago. That's the returns of how many times? 10 times within a period of 10 years. So how to spot a big gain? As I keep on saying, it does not happen all the time. There is a time to buy. So when to buy? So you need to study the 4 elements of analysis. And all these 4 elements of analysis must line up. Fundamental, cycle timing, technical, and sentiments. So the cycle timing is the key. Due to the limited time tonight, I'm not able to go through the fundamental view, technical, and the sentiments. I only cover the cycle timing tonight for you. A time for everything. There is always a time for everything and a season for every activity under the heavens. There is nothing new under the sun. You all know, right? So no matter what, you got to understand the timing. For there is a time to buy and there is the time to sell. If you can pick the right timing, surely you can make a very big gain, big return. Okay, this guy, William D. Game, he is a trader. He was a trader. He got his idea from the Bibles, a time for everything. Do you know how much money he made? He made about $2 billion on trading and investing. He had proved that cycle operated under the law of vibrations, which means there is a cause and there is an effect. And this is one of the methods that I learned from 3 gurus quite a while ago. And this record, you can see the record here. There is a bull time and a bear time. In 1996 up to the year 2000, it's so easy to make money. You can see the return is about 100% per year, and this one in the year 1999 is about 450%. But in the year 2001 and 2002 is so difficult because it is in the bear market cycle. So there is always some significant market cycles. It can happen once in 3 years, 5 years, 7 years. 3 years, 5 years, 7 years are the smaller cycles. And then these bull cycles or bear cycle can happen like once in 8.6 years, once in 10 years, 17 years, 20 years, 30 years, 40 years. And in all this market cycle, you can always see the turning point. So it also means that you can see the cycle top or cycle bottom. Of course, you like to buy stock when it is at the bottom, isn't it? Why market cycle? Can market be timed? Can anyone tell me why market cycle repeat? Simply because our human behavior never change, and history repeat. If you want to time the market, obviously you also have to know about the fundamentals background, what is going on in the economic cycle. Let me prove to you that the cycle can be calculated, can be timed. I'm going to show you the chart SPX 500. This is an index. How I got this 15% to 18% decline from August in the year 2015. That was predicted sometime in February 2015. You see, this was predicted in February. In my calculations, I predict that this is likely going to be the top, and then there will be a big plunge. And it did happen, 18% penny decline. How did I get that? It's based on these calculations. I won't go through this, but you can see that I won't go through this in detail, but you can see briefly from here that just using a simple Fibonacci ratio, you can calculate the turning point. For example, in September 1929, the market crash is from the top. And then in the year 1962, that is a cycle top 2 that spans about 393 months, and using this what they call this spread or 393 months, and with the Fibonacci calculation, you can calculate that you can project the turning points for the next cycle. You see, December 1934 is a low point, and then using the next calculation based on the Fibonacci ratio of 0.618, you get August 1982, a low point. So based on this calculation, you can predict that there is a turning point, whether it's from the top or from the bottom. Okay, and look at this chart. you can see that every turning point or curve at this important Fibonacci ratio point. For example, here is the bottom and here is the top, and the ratio is 0.23, and then you go to the next one, 0.447, and get to the top, and then when come to this ratio 0.618 is the top again, and so on. Okay, so from here, based on the past historical turning point, you can predict the future's turning point, which is the ratio of 1. So you get to here, then likely that it will come down. Okay, same thing is you use this 35-week cycle high, you can project that the next when is the next high. You see 34, 35, 35, you get to the high point. All right, and then all these numbers are significant. All right, if you understand how to apply these trading cycles, then you can calculate and project the turning point, the future turning point, whether it's from the top or from the bottom. And now you can see that this Dow Jones, the past turning point, the same thing. This is called using the Fibonacci contractions. You can project, contractions from 2.618 to 0.618, and every turning point again occurs at these are the importance Fibonacci ratio. Okay, you see, all these are the turning point. Okay, now you can look at this this index is called the S&P 500. Okay, also this one is using the 95 trading days. Every 95 trading day you can see the bottom from here to here, 95 days, 96, about 96 is bottom, and then it's go up again, and then from here another turning point is go up, and then from here is another turning point go out, but then it start the corrections until it hit the next turning point. I had to stop here for just for a second, all right, because of the sun's I think I had some problems with this one of the slide. Just give me a minute. Okay, I'm coming back. Sorry for the distractions. You can see the Westpac Bank. The pattern is so uniform, every cycle you get to the top, similar cycle you get to the top and start to come down, top, top, and top, and then you start to come down, and when you come to this point, you can see that it start to plunge. Why? Because this is all based on a historical pattern and some sort of these are technical calculations. And this is one of the cycle timings. Based on the numbers or days. And you can see the top here, the top here, the bottom here, the top here, all the based on the patterns, cycle patterns. even the interest rate cycle, you can see for 30 years, this get to the top and then come down to the bottoms within a span of 30 years. And the next 30 years, it start to going up from the bottom to the top. After it hit the top, and it start to come down for the next 30 years. And then you all know that the interest rate cycles has started to go out again in the last 2 years, isn't it? But not here in Australia yet, but then in USA, America has already started going out bit by bit. Now we can look at the past cycles of 100 years. And the next few slides I can show you how accurate is the 17-year cycles for timing the market turn. Just look at this chart. Starting from the year 1812. No, sorry, starting from the 1792. You can see there is a bottom here. 1807, 17 years later, is another bottom here. But then in the 1824, another turning point. It turned down first, and then it go out again, and then it turned down 17 years later in the 1842. So you can see the 17-year span. Every 17 years there is a turn. Right? 17 here. There's a turn here, right? In 1877, and the next 17 years later is 1897. Then it start to go out again. All right. And then the stock market get to the top in the year 1929. And do you know what happened in 1929? There's a crash. It's crash. Sorry, crash is here, 1929. But 17 years later, I mean counting from 1914, it get to the bottom in 1932, and that is another turning point here. You see, 1932, 1949, every 17 years there is always a turning point. In 1982, another one. 1966, the top, and then going down 1982, another turning point here. And then the year 2000, there is the absolute top. Alright, and then the market crash. Alright, when is the next 17? Next 17 years, that is happened last year in 2017. And what happened in 2017? It's supposed to be a low or a high, isn't it? 2017, but somehow something happened. The cycle inverted. It went through the resistance and made a new high. This is called the cycle inversion. So this is a very bullish cycle. If you based on the past 17-year cycle, 2017 should see the top somewhere around here, and then market crash, but it didn't happen because of the cycle inversion. Why the cycle inversion happened? It became a top. No, it should be a top and then plunge to a low point, but it didn't happen because there is a political change in the year 2017. Who was elected as a president? Who is he? Do you know? That is Donald Trump. Alright, Donald Trump was elected. And he reversed all the economic policy implemented by the previous government. That's under Barack Obama. because of what he was trying to do, the market broke through the resistance and went up to new high. So now, is it the time to invest now based on this 17-year cycle? Yes. For the next few years, I want to tell you the stock market can continue to be very bullish. But on the shorter term, there will be a big corrections which is coming soon. So during the correction, when the market get to the bottom, is the time to invest your money. As I said earlier, there is always a time to make big return. It's not all the time you can make big return. You just have to invest, heavily when the cycle is good, when the cycle is bullish, just like in the property cycle. If you invest in the property cycle, last few years you make money, but it has reached the top in the year 2017. It's too late for you to make big money now. It's very hard to make money from the property market in the next few years. Okay, you can see from these 17-year cycles. Alright, by right, in the year 2017, it should plunge, but it didn't. It broke through because of the political change in US. It continued to go out. Then there is a small correction here, and it will continue to go out. And in the next 1 month or 2 months or 3 months, I expect some sort of big corrections, and that is the time when you get to the bottom. That is the time that you can invest your money in the stock market. Even if you look at the 40 years biblical cycle, this 40 years is very significant. Every 40 years, there is always something happen in the world. Even in the ancient time, every 40 years something happened. Alright, you can see from the slide here. I'm not going to go through all this. It's just something, you see, a mystery or something. I do not know why, but in any case, there is always some cycle that you can see the what they call boom, and there is a bust. Alright, you can see all these things. Rain fell for 40 days and 40 nights. Moses lived in Egypt for 40 years. And Jesus fasted 40 days and 40 nights. Jesus remained in earth 40 days after resurrections. Okay, this is a very significant event in the Bibles, in the biblical time. But what about 40 years gold cycle? Look at this slide. In 1971, President Nixon removed the gold window. At that time, gold price was fixed at $35. 40 years later, that was in the year 2011, gold price was at the top. This was at the bottom, 1971. 2011, gold price was at the top, $1,920, which was the cycle top. 40 years later. Okay, so this 40 year cycle can be applied to the gold. And what about in 1933, US dollar devalued by 40%, okay, due to the sovereign debt crisis. Gold standard was removed. and the government banned the ownership of gold. At that time, gold was fixed at the price of $35. Okay, and 40 years later, in 1973, you saw the biggest gold surge from $35 to $200, and then correction down to $100 in 1976, and then skyrocket to $875. All right, so this is all about cycle timing. So in a certain period of time, when you invest your money, your gain is very small. Just like when I invest my first house in Sydney in the year 1994, for a period of about 7 years, my return was only 28%. But when you invest your money in the year 2014 to 2013 to 2017, every year you get about 25% return in the property investment. And now if you want to invest in the property, you go and borrow money and invest. Don't expect this kind of return anymore. If you can get 5%, you are laughing all the way to the bank already. You know what happened? Sydney price just was reported only last week. Some suburb already dropped 5.5%. I mean in a good area. Some not so good area already dropped about 10%. And what about in Brisbane? My good friend bought one apartment in the city in Brisbane, about 500,000. That was a few years ago. It went up to about 700,000. And now you know what is the price now? He didn't sell it, and now the price dropped back to 550,000. So you got to know the cycle timing. So you got to know when to buy and when to sell. All right. So now I'm going to show you the chart, the new gold super cycle. When is it coming? And what is the target? Is you know when to invest and what to invest, what gold stock to invest. Where based on this Elliott wave, this is another one. This is one of the methods that I use to project the cycle turn. Where are we now for the new gold super cycle? This new gold super cycle will go on until the year 2032. But it doesn't mean that there is no correction along the way. There is always a correction. Anything go up must come down. Alright, must come down for a while and then start to go out again. So you got to have the correct timing. So where are we now in gold now? I think we are now in the phase 2. In this wave 2, it's called the wave 2. Okay, wave 2 is coming down. Gold, I believe that it will continue to go down for the next few months. When you get to the bottom, then you should get ready to buy either physical gold or invest in the gold stock. Just like the NXT, one of the gold stock that I show you in the slide, going out from about 60-70 cents all the way up to $7.50, just within a period of about I think about 2 years, 3 years, a few years only. All right. So we are now coming down, and then when it gets to the bottom, anything that you buy, you can get many times return. When the gold is moving up in phase 3, that is the biggest, is the most powerful wave going up. That is how you make money. Alright? If you can put your money during this period of time, I can assure you that you make money. But you got to know when to get out too. Because when you get to the cycle top, there will be a corrections. that is in the phase 4. Like for example, let's say that you buy $1 gold stock ABC here, $1. It might go up to $10. All right, but during the correction, $10 might come down to this is not in scale. It might come down to about $4, $5, or sometimes maybe even $3 and go out again. All right. So you got to know the cycle timing. The same thing when the market start going down. You know, there is a period of time that the stock or whatever, even the property market, can going down and down and last for years. This is what I expect in the property market now, and that's also what I expect in the gold sectors. All right. When the downtrend completed, then it will start to go up again. All right. Okay, gold and silver bubble. It will come. All right, it will come. Just be prepared for it, and that is how you make money. You don't make money all the time. I'm talking about big money. I'm not talking about like, you know, your 5% or 10% per year. I'm talking about during the super bullish cycle. It may come only once in 10 years, one in 20 years, one in 40 years. You know, when it comes, you should know, you should get in. But the problem is, almost everybody doesn't know when it's coming. When it's coming, they're not to go in until you only get to the top. Then you start to go in. Why you get at the top? Because your friends ask you to go in. Oh, now it's the time to buy, so you buy. But in actual fact, it's the time to sell because it's already going out to the absolute top. So it must come down. So when you buy the top, you are finished. Where are we now for the gold and silver? We are now in the sell-off phase. Okay, if you had the money to hold, but for example, if you buy, you have some gold stock in hand or some physical gold, it's okay. If you can hold them for a period of time, because now it's in the sell-off. All right, and then you continue to go down, and then when it get to the bottom, and you can see the powerful rally, and this is the period of time that you can make big money. All right, but you got to sell when you get to the top here. If you don't sell, it will come back. You buy maybe $1 here, it get to the top $10 or $20 or whatever. But you are greedy, you don't want to sell. But there is a time to sell, but you don't want to sell. In the end, the market crash and it will come back even below $1. You are losing money. All right, look at this. This is a very powerful and very powerful chart based on 114 years data. All right. This, we are up to here now. Okay, I still expect it to come down, the gold price. Once it reaches the bottom, the price will continue to go up until it hit 5,000, at least 10,000 beyond the page. I can assure you. All right, this is a grain super cycle. There are different cycles. There is a cycle within the cycle. This is quite complicated. I'm not able to explain to you in detail here. I just want to tell you that there is a cycle timing and there is a cycle within the cycle. Okay, like this one too, in green color. This is called the super cycle. Super cycle. No, this is called this is a grain cycle. And this 1, 2, 3, 4. This is called the super cycle. And this 1, 2, 3. This is called the bullish cycle. All right. Now we are in this phase 2, phase 3, in the early stage of the grand super cycle for gold. So if you invest money here, I think this one lasts for about 100 years, because it's controlled by the government. The price was fixed at $18.93. If you invest in gold, you get nothing. And then for this period to this period, I think it's for probably about 20 years, maybe. The price fixed at $35. As soon as this price gold windows was removed, the price shot up to $820, and then it started corrections all the way, came down from 820 to 258 and get to the bottom. And then from the year that happened, 258, that happened in the year 2002, the year 2002. Okay, and then all went up all the way to 1920 over a period of 10 years, and the return is about 7 times. Okay, 10 years normally you double your return, right? Or maybe 7 years, 8 years you double your return. Okay, but this 10 years you get a return for about 6 or 7 times. This is the period that you make big money and fast money. So the time will come when this correction completed, you can make big money within a short period of time. 5 years is enough if you know how to invest, if you know how to trade, if you know how to leverage your money and make big return here. But mind you got to have a experience and the knowledge, because even if it hit 10,000 or maybe 15,000, at this moment the calculation tell me that it can easily hit 5,300. Maximum target is 10,000. But is something wrong with the whole world, like for example the debt crisis or whatever, the confidence crisis in the US government, the price can go up beyond 10,000. But you got to know when to get out too, because if you don't get out, the next cycle, the next big bear cycle might hit you. That can bring down the price maybe from 10,000 or 15,000 even down to $800 again, or maybe below that. All right. This one I use a simple Fibonacci ratios to calculate the top, the bottom, the top, and then I have a detailed calculation, but it's not presented here, so you can get down to here and then start to rally. Okay, this is using this pi ratio based on 1.618. all right, you can see all this calculation here, the Fibonacci ratios and the numbers or cycle patterns in terms of trading wicks, that you can see the top and the bottom and the turning point. All right, even you just use the what they call the past historical cycles, 8-year cycles. Every 8 years in gold cycle, you can see the bottom, but there is a delay here. I think the cycle has inverted. By right, the gold should start going up and up and up, but because that Donald Trump, I hope you like him. I can tell you, most people doesn't like him. Okay, don't like him. I don't like him when he bullshit, when he tweets so much, when he talks so much, but his economic policy is very good, I can tell you. Okay, he got a big mouth anyway. Of course, he also got a beautiful woman beside her, and because of his new economic policy, I think gold can still, the gold bull cycles has been delayed. Alright, so when it comes to the bottoms, I think it can go up and up. Okay, you can see the point here. This is the high point, and sorry, press the wrong button. You can see the high point is taken out. This is broken. It go up to new high, and then a period of consolidations, and then it break here. The high here, it break and then go out, and then the high here it break. It brought the high and then go to new high and then start corrections. So when the correction is complete, this high will be taken out. This high is 1920, okay, 1920, and it will be taken out, and then you go out to new high to 3,000, 4,000, 5,000 and beyond. Even based on this technical pattern, we can see that gold is very bullish. Alright, unless gold break this point, if gold break this point, then it will become very bearish. As long as it stay above $875, gold have a very big chance of going up to 5,000 to 10,000. Okay, at this moment it's still looking good, but on the shorter term, I expect the corrections to continue. Alright, correction needs to be completed before it can go up to the new high. Okay, the every 8-year cycle, 8 years, this one 8 years later, 8 years later it go out. Okay, now 8 years later actually should happens in the year 2016, just because 2016 and 2017, but because of Donald Trump came to power, the cycles simply reverse. This is called the cycle inversion. Even for the silver cycle timing, based on the sunspot intensity, 11-year cycle, you can see the turning point. Every 11 years, there is a turning point in the silver cycle. Okay, this silver is a better investment than gold. If you know how to do it, you can make a bigger return, a faster return than gold. Okay, even when you invest in gold and silver, you can see the season. There is a seasonal time for you to invest in gold. All those green, these are bar chart green, is a time to invest. Now this is based on the seasonal month. The best time of the year for gold to invest is somewhere here, somewhere here, somewhere here. Alright, you might find it funny why this cycle repeat. Actually, it's very easy to understand, because our human behavior never change. Our passions, our greed, our fear, we never change. Even you live 1,000 years ago, 2,000 years ago, you also think about money. Today you also think about money. You never change. 1,000 years ago, you like beautiful woman, and today you also like beautiful woman, isn't it? Our human behavior never change. The government is all corrupted. Every government is corrupted, I can tell you, just a small or big. But of course, the most corrupt government you know is Malaysia, right? Under Nazi. Incredible, isn't it? The human behavior never change. We're all greedy. We do the same thing again and again, never change. So if we know what is going on in this society, if we know the fundamentals background, if we know the economic policy, if we know what government is going to do, and based on the historical data, we can calculate, we can project the next turning point. We can tell what stock to buy, which industry to go in, isn't it? A bit of digression here, actually it's not in the slide here. You know what? The electric car, whether you like it or not, in 10 years time or 15 years time, probably in 15 years times, most of the people are driving electric car. Okay? At the moment, you are not driving because the battery is still very expensive. The car is very expensive. But all the car manufacturers now are lining up billions of dollars to manufacture the electric car in the next 20 years, 30 years. So from here, you know what stock to look for, what stock to buy, what industry to go in. You're going to buy the lithium, you're going to buy the cobalt. I can tell you, the lithium has gone out a lot already, but now is the time. Now is a big correction time. It presents the next opportunity to buy low. All right. So you got to know what's going on. Don't go and watch the movie all the time or YouTube or whatever. Spend a bit of your time to educate yourself, to learn what is going on in this world, and learn about this cycle timing, learn about the technical, learn about something that is related to your money, that you know where to invest, how to invest, and how to get a big return. And another bit of digression here. You know what? My wife nephew, about 10 years ago, I think it's about more than 10 years now, maybe, yeah, about 10 years ago, maybe 10 years ago, he and his wife bought two properties. You know where? If you had the money to invest in property, where do you invest in 10 years ago? Surely you want to invest in the what they call in the metro area, isn't it? Or you don't want to invest in the what they call mining town, isn't it? Of course, about 10 years ago, or more than 10 years ago, mining town property keep on going up and up because of the mining boom. But as soon as the mining boom over, the property price never stop falling, I can tell you. But if you know where to invest, sorry, a little bit of disruption here. So if he know much about property investment, he should not put the money when the cycle was at the top. He should put the money in the metro area in Brisbane or in Sydney or in Melbourne, where you get the very big return if you invest money in that. About 10 years ago, start investing. Unfortunately, he did not have any gain at all. In fact, it's losing money, I tell you, because you got to learn, you got to educate yourself. All right. Okay. Having talked so much about the cycle timing, there is always a time for the cycle to bottom, a time for the cycle to top, and there is a time to buy when the cycle is at the bottom, and the time to sell when the cycle is at the top. But in order to accurately work out the cycle turn, you also need to know the fundamental, because you need to find the fundamentals to back out your cycle analysis. For example, if you know that US government is in big trouble in the next few months, or or currently or in big trouble. Let's say Donald Trump is not doing well anymore because he talked too much and nobody trusts him anymore and his policy is not working. Then you know that then the government, then a lot of people will start to lose confidence in him. Then you know that gold is the sector to go in, because gold is for hedging against the government. All right, against this what they call the economy downtrend. All right, so there is always a reason behind that why the stock market will continue to go out, why the gold will start a new what they call the new bullish cycle. There is always something behind. There is a fundamentals. Fundamentals are the driving forces. So you got to understand what are those fundamentals behind. All right. For example, the debt crisis. Let's say that every world government is going to face debt crisis in future. Then the gold will go through the roof. What about confidence crisis in US government? Who knows? Donald Trump lasts only for 2 years, 3 years. He might get impeached. He might put himself in troubles. We do not know. All right. And then also the bond already actually busting already. Bond, okay, government bond. The bond already coming down. All right, new economic decline and the crisis in Euro. I think the European Union, trust me, will disappear next few years. That's one of the reasons that gold will go through the roof. The Euro will crash. All right. War conflict. All these are the we are now in the new war cycle 2016 and 2036. All right, the war is in turmoil, I can tell you. So all these fundamentals, when they are ready, then the market will start to skyrocket or start to decline, go into the drain. All right, so okay, look at this chart was drawn 2 years ago. You can see it's going up, and then it was the place here I project that it will continue to go up and start to come down. Now it's already come down a lot already. I think I had to hurry up. Time is running out. So sorry for the technical what I call the distractions along the way. And actually there are a few more slides to cover before we complete the presentations. Earlier on we talked about the fundamentals behind. For every cycle's turning point, there is always some fundamentals behind. That is the driving forces for us to predict the cycle turn. Timing cycle is so critical, so crucial, but we must know the driving force to predict the cycle top and bottom. So what are those fundamentals behind? Early on I mentioned about, like, for example, the economics policy, the debt crisis, the confidence crisis in the US governments, even the money flowing out of the bond market, and so I expect the new fundamentals behind, such as new economic decline and crisis in European Union, that will cause the euro to crash. And I strongly believe that the European Union will disintegrate in the next few years, so that will cause the money flow to the inflow into the US market. So that will benefit the US share market, and that will cause a big rally behind. And because of the crisis and the economic decline in the European Union, I believe that gold will also get the big benefit. That's why I believe that gold will go out in a very big way after the completions of the current corrections, meaning that it will get to the bottoms and they will start the new bull market. There's the time that when you have to get your money ready and invest heavily. And I have shown you the bond bubble chart. That this point was the point that I predicted, that will be the top. Indeed, went up to the top, and in terms of timing, it's a little bit beyond that, and then start to come down. And currently, the bond market, is still going down. The trend direction is still going down. It will continue to go down. So that is the one of the driving force that caused the stock market to go up, because a lot of money invests in the bond market. Actually, the bond market is the largest investment market in the world. That will cause the money to flow out and flow into the share market. So talking about the crisis, the debt crisis, actually, the US government is already bankrupt. At the moment, the US government is owing about $21 trillion. How are they going to pay back? Well, it's impossible for them to pay back, and they had no intention to pay back anyway. So a time will come, the US dollar will crumble too, will crash to pieces, and that will cause the gold price to skyrocket. So not only the US government is facing problems, with the debt. Every government, global government, is having this problem, including Australian government, Malaysia. That recently under this what they call the new government in Malaysia, that out all this dirty part of the former government under Najib. So much money was stolen, and in fact the country also going bankrupt. There's no money, but where do they get money to survive? There is only one way, is to print money, and at the same time, selling the government bond to the investor. But this thing will stop. A time will come that they cannot print money. A time will come that they cannot sell the government bond, because no one is going to trust the government. So that is the reason why a day will come for the gold and silvers to go through the roof, and that is the time that when you can make big money in a short period of time. All right, and the new stock super cycles, that it will continue to go on for the next 17 years. Earlier on, I talked to you about the 17-year cycle turn. In the 2017, actually, it should be the top, and the stock market should come down in a big way for a big corrections. But it didn't happen. Why it did not happen? Because the cycle inverted due to the elections of the new governments in USA under Donald Trump. And Donald Trump, as a businessman, he knows how to push for the new economic policy, reduce the tax, and trying to increase the infrastructure spending. Because of his new economic policy, a lot of the money start to flow out of the European Union into the US. So the money will go into the US market for what? is to buy the share. That's why the share break through the resistance and continue to go up, and it will continue to go up for the next 17 years. But remember, even in a super cycle, there will be a big corrections along the way. That means that you don't get caught in this correction time. Yeah, you can buy, but there is a time to sell too. So the super cycle meaning that it doesn't mean that it continue to go up, never come down. Yes, there will be a periodic corrections along the way in a bull market. So that is why that you should invest in the right cycle timing to get the maximum return, fast return and quick return, like as you can see in the chart, earlier chart that I shared to you about how to invest, what stock to buy, and to get the big return and fast return. Remember, it doesn't happen all the time. It only happen in a certain period of time during the bull cycle. So you got to know when is the bull cycle coming. All right. And then you can see that this SPX, this is a 500 stock listed in the this New York Stock Exchange. Well, we are now in the next 2 months. I expect some sort of corrections. After the correction is completed, it will go to a new high. Still a lot of money to be made in the next, at least in the next 12 months. So when it comes to the cycle top, probably there is a big corrections again, sometimes late next year. But if we break through the resistance, it can go a lot higher. But in any case, there is a bull cycle. I mean, the current cycle is still in the bullish phase. All right, so just wait for the corrections to put your money into the market. And then you look at the Dow Jones, the same thing. I expect to go a lot higher from the current level. But we need some sort of correction first before it can go up to the new level. All right, and this is a chart that not only show the wave 1, 2, and eventually it will go in the wave 3 out. It also show the pattern, the support here. This is rising wedge patterns. If it break through, it can go out a lot higher. So not only you need the fundamentals to build out your cycle timings calculations, you also need the technicals pattern. You need the technicals price volumes, to go in line with the cycle timing and the fundamentals. That's why to get the accurate pictures of the times to invest. All right, I can look at this slide. This slide can accurately tell you that why money flow is so important. You can see at this point here, the US dollars shot through the roof. Why? Simply because of the sovereign debt crisis in Europe and caused the money inflow into the USA. That's why the US dollar going up. But a few years later, the price start to drop again and plunge because of the dollar's devaluations as the government was facing the crisis. So from this chart, you can tell that the capital's inflow and outflow is so important for you to know. Once you know the capital's inflow and the outflow, then you know where to invest with the help of the cycle timing. Okay, this is a superannuation return, and this is one of the superannuation I help to manage. Over a period of 4 years, the supers double out, meaning that you get about 25% return in a much safer investment arena like super fund. In the financial years of 2014, that's in June, you can see the capitals at that time is about 110, but when you get to this year 2018 June, the amount of money you invest double out. It's double out. It's about 230,000. So that is a great returns. But you got to know how to operate according to the cycle timing, which sector to buy, whether you play aggressive or whether you play safe, and based on the cycle timing. But this super fund can get such a good return simply because you can operate in a way that you can you can change the sectors to invest. This is a very good super fund company where you can choose to invest whether in an aggressive manner, whether in a what they call the low growth, not low growth, in a safe area, or whether you want to now you can, as a matter of fact, you can get in and get out, or you can even convert everything into cash if you think that the market is going to come down in a big way. Then you can start to buy in again and switch over to the sectors, to invest again. I'm going to conduct a 2-day seminar, how to trade and invest, and in the seminar you learn when to buy and what to buy. So I will teach you how to calculate the cycle timing, how to apply the fundamentals, and use the fundamentals to support your cycle timing calculations. And on top of that, you also have to learn the technical charting. That's talking about the price and volume and about the technical patterns, and not only that, you also have to learn the sentiment analysis. Sentiment analysis means that when everybody is getting into the market, making money, and getting too bullish, over bullish, and that is the time that you have to get out. So you also have to learn sentiment analysis. On the other hand, if the market is too bearish, everybody is frightening to get into the market, and there is a time that probably is a low point, and you have to be bold enough to get in to buy at a low price. Okay, so we also teach you what indices to look into and buy, or what sector to buy, or what stock to buy for a big return in a certain period of time. Remember, there is no such thing as you make money every week in and out. There is always a better time to buy and better times to make a big gain and to fast return. But there is a period of time you got to understand that you should not buy anything. In fact, you have to get out of the market and go for holiday. Don't do anything, because you're not going to get any good return. You might even lose money in those periods. So also I teach you how to use small capitals, like say $3,000, $5,000 to trade with leverage. Remember, you can only trade with leverage when the market condition is very good, it's bullish. Otherwise, don't touch leverage. It's risky. I will teach you how to invest on the longer term with a good return. Double out your money in 3 years, 4 years, 5 years. So in other words, the seminar will cover short-term trading and longer-term investing. All right, I will teach you how to improve your super fund return. Don't just a lot of people don't know how to improve the super fund return. They just simply leave it there, without knowing what is going on in the super fund. But there is a way, there is a strategy to quicken your return, to build out more profit. And having talked about all this type of cycle timings and technical charting, you can learn with confidence, with convictions, with clarity. I will teach you until you fully understand how to apply. And of course, the bottom line is how you can implement the risk and money management, risk strategy and money management. It's very important. This is the key. How to protect your capitals, how to improve your return. All right. On top of that, I also teach you how to trade with my own method that was developed in the year 2005 or 2006, something like that. That how to make a small profit within 1 day or 2 days or 3 days. Normally it's about 1 to 5 days. Okay. So, but the best is 1 to 3 days. How to get in and get out for a bit what I call the rally in stock, in price. So this is a very powerful method for trading, and I have few slides here to show you that this is a game from the very short-term trading. $200, $195, $273, and this one minus 400 is not the losses. It's the money that I took out, the profit that I took out, along the way. So I never leave the profit in there. I always try to take the profit out. Even a little bit here and there, it doesn't matter, because don't put all the money inside there for the short-term trading. Short-term trading, you need only a small capitals, and rather put all your take out some of the profit and put into the longer term investment, say to about like 1 year to 3 years, 4 years, 5 years. And this is also the trading result for a small profits within 1 day to 3 days. You can see some of the gain here: $184, $263, $167, $211, and there is one small loss here, minus $39. I just get out and take the losses. There's no such thing that we can win all the trade. As long as we can win about 7 trades out of 10, we can make a very good profit already. You win $1 and you lose 30 cents, you still make 70 cents. The bottom line is the profit. Okay, this is the one, or is another trading result here for you to see. That is is a short term. This is a short term profit. You also can see some of the profit here and there. And this slide also show you that the profit about 376 and 357 gain, $7 for a profit. So in any case, it's time to weigh out. Believe in cycle timings. Believe that it's always a time to buy, a time to sell, and believe that there's a better time to make quick gain, big return in some period of the time. Remember, it's not all the time that you can make money. Just like what I mentioned earlier on about the property market, the same thing. You know, when I bought my first house in the year 1994 for the investment, and then in the year 2000 I sell it. I made only the gain over a period of about 7 years. It's about 7 years, is it? 20. Yeah, 195. It's about 6 years, maybe about 6 years. You know, the gain is only about 27%. But if you invest your money in the year 2013 to 2017 in the property, you can make about 25% gain per year. So this means that there is always a better time to buy and better time to sell. The same things in every investment. All right, in every investment, it doesn't. I don't really care whether it's a property or share or whatever. As long as it's the time to make money, it's a time for a bullish cycle. You have to be in there to make a fast return and good return. You know, because in some years, as I said earlier, this is a repetition, but just to remind you that, you know, in some years it's hard to make money. So you don't make money year in year out, and big money. I'm talking about big money. So it's important. You got to know, you got to learn, you got to educate yourself, you know, and be prepared for the big cycles to come, so that you can invest heavily into it. So don't do the same thing again and again. This is our human nature. We always do the same thing over and over again, and how to make you know, how to achieve a different outcome. So this is not quoted by me, of course, it's quoted by this guy, this old guy. You know very well who is he, right? So the insanity is doing the same thing over and over again and expecting different results. So it's a time to change your thinking and to do a different things. To do all this, of course, you have to educate yourself and invest in some money. As I said to you earlier, I had no choice. When I came over here to Australia, migrated to Australia, I couldn't get into my professions, so I was forced into the investment, into the stock market. That's how I get started. So I do a different thing. Initially, of course, as I said, because of the inexperience, because nobody can really teach me how to avoid the mistake. But after periods of hard work and perseverance, I can do it successfully. So I expect you to do the same thing. So if you have any questions to ask me, don't hesitate. Just forward your questions to me, and I will try my best to answer your questions.
Thank you for attending our webinar. We give thanks to John Yee for delivering such valuable information to us. However, it doesn't end here. We are privileged to invite John Yee to Brisbane on the 1st and 2nd of September, which is Saturday and Sunday, for a full seminar talk to teach you on timing cycle analysis. Imagine the confidence you will be able to have to time the markets with this incredible skill. You will not only know which price to trade, but also when to enter or exit the market. To throw in as a bonus, John will reveal some markets and sectors that you can invest in now throughout the seminar. Normal market price for this seminar is at least $3,000 per person. Out of his passion to teach, however, he chooses to charge only $2,000 per person, and not only that, he gives continuous support to make sure you do well in your trading and investment via newsletter, email support, and appointment telephone support. On top of all these, you are allowed to attend the next seminar for only $100. John conducts seminar only once per year in Australia, and he limits the classes only up to 10 people to ensure that you get the maximum benefits in terms of understanding and application. Please do not miss this opportunity because we will only cater for up to 10 people. Yes, I will repeat, only up to 10 people. Sign up now. The first 4 people will receive 25% discount, which is a $500 off. Register now by calling James Lim at 0431 057 537. Or you can contact us if you want to know more about the seminar. Thank you for your time.